in fourth and final part in Elliott Waves from A to Z series, which naturally covers the specific type of technical analysis applied on financial and forex markets. And today we examine in particular the concept of terminal impulse model. At first, let's learn the agenda, what we are going to cover during today's session. First, we are going to configure a terminal impulse. Then we will go through models that include this impulse structure. In the third part of our session, we will learn in particular how terminal impulse is applied in zigzag models of bigger time frames. And finally, we'll examine samples implication in live trading. If you have got some experience in individual trading, you probably know that any winning trading strategy won't be working sustainably without a proven and trustful partner. This is important to be educated not in trading skills, but in trading conditions as well. So please have a look on features offered by Tickmill. If your broker doesn't provide you with such essentials as competitive spreads, segregated funds, and lack of free quotes, you'd better think of it once again. Going through disclaimer. So I suggest us starting with the general introduction for those who are joining us for the first time. Elliott Wave Theory is rather a popular concept of technical analysis, which is broadly used on financial markets. And it was introduced earlier in 20th century by Dr. Ralph Nelson Elliott, who's described the general principles in his book Nature's Law, The Secret of the Universe. As you may imagine from his work's name, the general application of his theory is rather universal. So let's see how nature's law fits into financial markets. So the first general conclusion is that any trend move consists of 5 waves that include 3 impulse waves in trend direction and 2 correction waves, which direction is opposite to trend. As a rule, they are counted with numbers from 1 to 5. Second, once trend move is completed, correction follows. It consists of 3 waves, 2 in correction direction and 1 opposite to it. Such moves are marked with letters from A to C. Here are 2 most important deductions from nature's law. First, they are universal to any kind of mass process. And second, all waves consist of smaller waves of same structure and are part of bigger waves themselves. The standard Elliott wave cycle is presented on the picture below. As you can see, the cycle is distracted into 2 parts. The left corner represents the impulse part, which we are going to examine in detail during today's session. And the right side of the screen represents a typical correction move. Just to notice, we spent previous 2 sessions learning different types of correction wave models that are known in Elliott Wave Theory. It's believed that by original rules there are 16 general correction models, so quite a few to learn for you. So if you're interested for the Europop, you can follow these sessions on the YouTube channel for Tickmill, or ask your account manager for the recording. Once again, the topic of today's session is trend is terminal impulse. But before we go to it, it's very important to remind you on regularities of trend impulse. In order for you to understand it correctly, Elliott Wave Theory represents just two impulse moves. The trend impulse was covered in our first session, and we are going to wrap up it at the moment. And the terminal impulse is our key topic for today. So trend impulse is a model of 5 waves. 3 of them are trend waves of same structure and move along trend direction, and 2 are corrective. The inner structure of trend impulse is 5 to 3 to 5 to 3 to 5. That means that waves which are moving in trend direction, these are waves 1, 3, and 5, are impulse waves themselves and use 5-way structure, whereas waves 2 and 4 have a correction structure. Main rules for trend impulse are: wave 2 never retraces more than 100% of wave 1. Wave 3 cannot be the shortest of waves 1 to 3 to 5. Wave 4 should not overlap price range of wave 1 except from diagonal triangle. And wave 5 finishes above wave 3. Just a small notice that in case you're having some questions, please leave them in the chat section in the lower left corner of the screen. Now let's move for terminal impulse. At first glance, terminal impulse has very similar structure to trend impulse, but of course it has got some differences between them. So key differences are that 5-wave structure, each of these 5 waves has got a correction template. As you can see on the right side of the screen, 5 waves are distracted into details. So even waves 1, 3, and 5, which move into trend direction, are having 3-wave structure, which are marked with ABC letters as well. So once you see that there are a few waves coming into trend direction but having correction structure, you can be sure from the beginning that you're dealing with terminal impulse rather with trend one. The second difference between trend and terminal impulse is that wave 4 overlaps range of waves 1 and 2. Let me mark it on the screen quickly. So one of the basic assumptions for a trend impulse, and that's a rule of thumb, that the top of wave 1, that means the starting point for wave 2 and the finishing point for first wave, should not be crossed with the low of correction wave number 4. As you can see on the picture, it's not applied for terminal impulse, and it's a clear distinction between these two impulse models. And finally, the third difference is that starting levels of waves 1 and 3 could be crossed, which means that during the forming up of following waves, as you may know in some correction patterns, for example, in flat corrections, the latter parts of the models may overlap the beginning of waves. In such case, the beginnings of waves 1 and 3 may be crossed during such correction models. It's quite important to note that the probability of such scenario is rather low for Forex market. So the two main properties for terminal impulse, which is highly recommended to remember, is this first 2 points. All waves in trend impulse have 3-element corrective structure, and second wave 4 overlaps range of waves 1 and 2. Terminal impulse by itself is a trend wave which fully consists of correction waves. Same as trend impulse, terminal 1 has 5 elements. 3 of them use the trend direction, and 2 of them have an opposite direction. All waves which are included in terminal impulse have correction inner structure. So this inner structure may be represented as 3 to 3 to 3 to 3 to 3, which is quite similar to the inner structure of a triangle model. But the difference between terminal impulse and triangle is that terminal impulse is a continuation of a trend movement, whereas triangle may only represent a correction model for the trend. The same as trend impulse, the waves of terminal impulse are marked with numbers from 1 to 5, which explains its trend character. At the same time, the waves which are included into terminal impulse and represent its inner structure are marked already with letters from A to C as they have correction structure. An important note is that such aspects of forming up the terminal impulse, for example, signal lines, extension rules, and other assumptions are identical to the rules which are described for trend impulse. If you want to recover your knowledge about trend impulse, we highly recommend you to use our webinar from 9th of September, which was the first part of current Elliott Waves series. In the current session, I would like to pay extra attention for alternation rule, which is applied for terminal impulse, the same as for trend impulse. So there are 4 parts of this rule, and we will go through it one by another. So first of all, price range for waves 2 and 4 must be different at least by 38.2%. This number is not random, but is taken from the Fibonacci theory, which is highly correlated with the Elliott Wave theory. Second, correction structures for waves 2 and 4 are different, which means that if wave 2 is represented by zigzag, wave 4 should not be another zigzag. It could be a triangle or a flat correction instead. Third, timing for waves 2 and 4 varies. And finally, retracement ratio between waves 2 and 4 must be different. As a rule, wave 2 is deeper by correction ratio in comparison to wave 4. So, for example, wave 2 may represent 78.6% from the length of the trend impulse, whereas wave 4 may have only half of the length in comparison to the previous trend wave 3. Where can you find terminal impulse? The answer for the question is quite important, as it may help you to understand the positioning of the price model and also understand if you are dealing with terminal impulse or other wave structure. Terminal impulse by itself has a very strict rule, which is an important property for this model, as it could be only the final part or the finishing element of the wave structure of bigger scale. That means the terminal impulse always is the last wave in bigger wave models. In particular, it could be wave 5 in trend impulse, it could be wave C in zigzag, or it could be wave C in flat correction. You cannot find or identify terminal impulse in any other place in wave models. Now let's go through examples of terminal impulse positioned in different wave structures, and let's see what are specific features for each of them. We are going to start with the trend impulse, which is being completed by terminal impulse. The schematic understanding for this model is represented on the slide. As you can see, the overall structure does have an trend impulse properties. So waves which are having a trend direction consists of 5 elements. Wave 4 does not overlap the beginning of wave 2. Wave 3 is the longest one, etc. So all rules are in place. Our major point of interest is that the final part of this trend impulse is represented with a terminal one. So the key difference or the key feature for such trend impulse, which is being developed using terminal one, is that signal line which connects the beginning of waves 2 and 4 is crossed during the making up of wave 5. As you remember, in original theory, which is applied for terminal impulse, the signal line 2-4 should not be crossed until the wave structure is completed. In the case of terminal impulse as final part of trend impulse, this move is even welcomed. As a rule, once signal line 2 and 4 is crossed, that means that wave number 5 is finished. But in the case of this example, you see that whereas wave 5 is crossed, it continues being developed as part of terminal impulse. As you may see on the given example, the the signal line is crossed only after only the first part of terminal impulse is being developed. So at first it may bring you to the wrong assumption that wave trend impulse structure is completed at the point of first part of terminal impulse, and you may quit long position or open short one, experiencing a bigger correction move. But in reality, you see that the upward trend is being developed, which brings you to the understanding that you are dealing with a terminal impulse. So what would bring you, like once the signal line 2-4 for bigger structure is crossed, what brings you to the understanding that the overall impulse structure is completed? In order to understand this, you need to draw another signal line 2-4, which represents the parts of just final part for terminal impulse. Once you see that the smaller minor wave is crossed, it brings you to the signal of completing the trend wave and the continuation of correction move. If you have got any specific questions, please leave them at chat section. And now we are going to move forward to see how terminal impulse is used as wave C of zigzag or flat correction. So the left corner of the screen represents the zigzag, which is completed by terminal impulse. Of course, this is vital for any wave model, is understanding what is the basic signal line for it, as it leads for a clear market decision. So identical for signal line 2-4 in trend impulse, in comparison to zigzags and flat corrections, is signal line 0B, which marks the beginning of the entire wave structure with the beginning of wave B. In case wave C in zigzag is made up as terminal impulse, this line is crossed again, which is shown on the left screenshot. The logic behind such position is the same. Once you see that the signal line is crossed, you are having the initial assumption that the given correction structure, zigzag or flat, is being completed. Then you see that the price continues to develop in the trend direction or in the correction direction in this case, even after this line is crossed. It brings you to understanding that you may have expect the making up of further parts of terminal impulse. So one of the deductions you may use for your trading strategy is trying to trade accordingly to the expected parts of terminal impulse, which you are expecting to see after the signal line 0B is crossed. The second deduction from the given market situation is that you need to draw another signal line 2-4 inside the terminal impulse itself. And once it is crossed, it gives you the it gives you the proper direction. Please have your attention on the fact that during the making up of flat correction, signal line 0B is not necessarily crossed. It happens in particular for flats. Moreover, flat corrections with terminal impulse as wave C is a wave which consists of 7 correction models in a row. During the making up of correction model of such scale with 7 correction elements in a row, in real-time trading, there are multiple possible options for understanding such a market positioning, which is included in this price figure. The only possibility to control the completion of zigzags and flats with terminal impulse is mentioned signal line 2-4 of terminal impulse itself. There is an opinion that terminal impulses as part of wave C in zigzags and flat corrections or fifth waves in trend impulses of different scales are rather rarely met on Forex market. I wouldn't agree with such idea as terminal impulse is only one of 2 probable scenarios for terminal impulses. And of course, you've been seeing by yourself the examples of complex correction structures which are developing in the trend direction, which is a clear indication that you are dealing with a terminal impulse. So I hope that the major explanation for today's session was clear for you. Let's sum up what we've learned during the day. First, terminal impulse is a complex model in Elliott Wave Theory. It has got trend character but correction structure, which explains its complexity. And the most important feature of terminal impulse is that it's always a final part of bigger wave model. As terminal impulse is a trend wave, its beginning may signal market entry. In such case, you need to control the exit from the position very attentively, as terminal impulse is a final part of price figure. From the other point of view, terminal impulse is always a final part of price model of bigger scale, and that means that the completion of terminal impulse itself is another opportunity to enter the market. Anyway, the assumption of possible forming up of wave structure of terminal impulse should leave you very attentive. Once you test these tools on demo account, it's high time for you to check its performance live. That is the right time when Tickmill can help you. The broker offers you classic account where you do not have to deposit as much and where the trading conditions are nevertheless great. With Tickmill's classic account, you can enjoy trading with quite a low spread that starts at 1.2 pips on Euro USD. In addition to this, there are absolutely no commissions attached to this account. This is quite an important feature for the beginners, as it lets them focus primarily on the market without spending time on calculating the profitability due to the commissions. For now, that's it for the series Elliott waves from A to Z. Just a short glance of what we've done during this September. We had 4 sessions. 2 of them were dedicated to different impulse wave structures, in particular trend and terminal impulses. And 2 other sessions were describing in details various opportunities for correction wave structures, including complex models which enable X waves. During this time, we did not only learn major wave models, but also described and saw in action major principles and regularities which are used during its development. If you're going to improve your knowledge in analyzing financial markets and currency pairs in particular, we strongly recommend you to pay attention for the professional books of Robert Proctor and Mr. Frost, of Neely and Elliott Wave Principle of Bellin, which go deeply in details of different rules and regularities of making up some peculiar wave models and aspects which are especially important for forex trading. As for now, even if you recover just these 4 webinar sessions, you're equipped with a decent volume of knowledge for individual application of Elliott Wave Theory in real-time trading. So once the session is completed and you've understood the material that's given through it, we invite you to choose the currency pair of your taste of your trading strategy and go through it historical values and historical performance, trying to identify various wave structures which have met before. When you do it by yourself, you will have a better understanding of how to see and distract these models in your live trading. As you may imagine, the understanding of wave models in real-time trading is much more different, as there is no clear answer which model this is in particular, and you may have to store in mind few various options. Going further for the plans, we are happy to announce that Tickmill is going to present for you the whole new series for webinars which are dedicated to major fundamental events which are going to happen during October months. We are starting just soon, this Friday on October 2nd, when we are going to explain in details non-farm payrolls, which are a major indicator for United States labor market. We invite you to participate in a webinar to master your trading during volatile economic events. In the series, we cover major fundamental stories and their market impact. During the first part of trading major fundamental events, we are going to pay attention to non-farm payrolls, that data publication. We will learn fundamental background, analyze market sentiment, and choose possible outcomes upon news release. This number is considered one of the major fundamental events for Forex traders, and this time it attracts extra attention ahead of highly speculated Fed interest rate decision. So prepare yourself for the Friday. And for now, I wish you a profitable trading and a harmonical development of your trading account. Have a nice trading session ahead. Bye.